it provides us the additional detail. Generally, they've asked us, disclose about your sustainability-related risk and opportunities. Then they go deep into details telling us that we have a climate standard called S2, and you need to report GHG emissions and other information around those emissions, that how you will manage those. So these we call topical standards, and there will be lists of topical standards which will be coming, right? And SASB practice guidance on the bottom is actually the set of books which they have appended to this standard. And those sets of books are actually scary for those who haven't worked on these. And this will be the journey which we all need to go for. We have to select what is applicable to us, what is relevant to us. We have to choose. We have to identify the data sets within our organizations. We have to augment our risk management, internal control, internal audit functions. So it's all embracing an enhanced level of information which we need to disclose to our stakeholders, right? So this is the structure of the standard that we see. And as we talk, the topic of biodiversity is on the agenda. Maybe we get S3 with this name. Now I'm reading from this standard. As one of my colleagues asked me to, that what actually standard requires. So the standard says they have given a haircut-based definition of sustainability. As I said in the start, there are other non-financial impacts on an entity which we can discuss in detail, but they have restricted it to the financial side of the story. And whatever that we convert into the financial reporting framework, why they are attempting this, it's a debate. It will evolve, and it may end up in a holistic sustainability reporting. But for now, what they're saying is sustainability is ability to generate cash flows over a time horizon of short, medium, and long term. Apparently, they're talking about profit-oriented organizations. Maybe they are addressing or talking about the issues which people face, that why businesses don't survive, why businesses fail to generate cash flows over a longer period. We accountants take a one-year assumption of the going concern, but the issues in a business model or a value chain may be longer term, which should be known to the stakeholders, or which are already known to stakeholders, and they are demanding that if you want funds from me, you need to disclose that how you will ensure that, for example, how you will get the feed gas for your fertilizer plant. And if you cannot justify that the mine on which you are working or the pipeline which is being supplied to you is subjected to a threat in the coming 5 years, the balance sheet will tell that, okay, you have made money this year, you can make the same amount of money second year, surviving that, your capital will not deplete. So financial reporting is not talking about that. But this standard, this sustainability is challenging you. Can you survive that threat? What are you doing for that? Are you adjusting your business model, shifting a geography, right? Or going to an alternate scientific process which reduces your dependency on that natural resource. So this is enhancing. Then the standard helps the entities to disclose information about their sustainability-related risks and opportunities. It also talks about opportunities. Risks we all understand. What kind of opportunities? There are a lot many initiatives, assets under control, which actually offset our exposure or the risks on sustainability-related topics. Now we can include those, right? Similarly, they're talking about general purpose financial statements. And in the definition, they're talking about sustainability-related disclosures or management reports plus the financial statements. Then they're talking about stakeholders or resources. So what they are talking about, Now, they're giving us the words to apply the standard. There can be broader definitions of these subjects, but they are now giving, like a standard, giving us the words. Will an entity continue to generate cash flows over a time horizon is sustainability, right? So what we are looking at, the prospects of an entity to generate cash flows, to get finance when needed, and to manage or maintain a cost of capital. Collectively, they have defined it as the prospects. So all the risks, anything that can impact these three is the subject of the standard, is identifiable sustainability-related risk for the standard. For whom we are doing the reporting? They have replaced the name of the stakeholders to primary users of general purpose financial statements. Who are those? Three. Investors, lenders, investors are the shareholders, lenders, banks, and other creditors, other ways of getting access to finance. So what they have done is, they are restricting the sustainability subject to keep it simple for the time being. This may not remain like this, and debates are already underway at various global fora. Now, as I said, they're not using the word business. They're using the word value chain. You're not analyzing a business anymore, you're analyzing a value chain. So the boundary has been extended. They say entity, your business, the stakeholders of the entity, for the time being the users, and the resources. And stakeholders are many more than those three. Those can be your communities in which you are operating, those can be your labor workforce on which you depend, those can be your skills, right? Those can be the governments, the regulators, all have impacts on your business. So all need to be under your watch list. And the resources. Now, this slide I would like to discuss. It may be interesting. And as I said that the concepts are evolving, there may be questions which you would like to debate. Right? For the sake of time, I would ask you not to do that, but I'm deliberately opening this discussion. In the traditional financial reporting framework, we have financial capital coming from the owners, investors, lenders, or for the time being, the stakeholders. And using that capital, we convert into manufactured capital. Right? We build assets. We bring in equipment. We deploy a model. Then there's another word, intellectual capital. For our understanding, there are some of the intangibles. And we all are aware that IFRS standards were very skeptical about including intangibles on the balance sheet. The debates had been continuing that it's very subjective to have intangibles or intellectual property or intellectual capital reflected in numerical form on the balance sheet. It allows disclosing it somewhere out of the balance sheet. But intellectual property, like knowledge, system, procedures, protocol, almost all the technological obsolescence happens here. If you cannot protect and innovate your intellectual capital, you cannot survive, no matter how good the balance sheet is. And any learned investor will not allow you to continue doing the business when you are at threat. Then the human capital. Availability in terms of quantity and skill set in terms of quality, motivation in terms of willingness, are all the challenges which organizations face. And apparently we don't disclose with much detail that what kind of dependencies we have or what kind of impacts we have due to this human capital. Similarly, brand equities, our relationships, our social positioning, our operation in a particular community, they all impact our business. Don't you as a stakeholders, wouldn't you like it that somebody tells you if you want to invest in a business, that what kind of brand equity they enjoy may not be on the balance sheet, but somewhere to my knowledge. Then there's another addition, the strategic capital. We can skip for the time being because the other 6 are actually the 6 capitals on which the integrated reporting framework is based. This picture. And this is mapped on the SDGs as well. So moving forward, there's anything that we chartered accountants do, we ask a question. If it is material, we'll include it. If it is non-material, we will not. The subject of sustainability has got a concept of double materiality. Yes, you talk about your financial impacts and present it in numbers and related disclosures. There's another concept of impact materiality. All the stakeholders and the environment in which you operate is impacted by your business, and you are impacted by those stakeholders. Those also need to be quantified. Fortunately, for the time being, and unfortunately in the long run, this standard is ignoring the double materiality and still focusing on the financial materiality only. And this is one of the criticisms that we have, and we have been reading about it globally, that this is a criticism or a limitation of this standard for the time being. For in the short run, when we adopt this standard, I think it's a good haircut that we have, that for the time being we are ignoring the materiality concept, which is relating to the impacts, mostly qualitative. Then material matrices, as I said that this bottom band is the guidance, which is open. For example, SASB covers more than 1,000 topics, covering 77 industries, they call it, or at least 77 businesses, they call it. It's a lot of detail which is available. As we go to the GRI, they have started issuing standards for all the industries, for all the topics, into 3 areas: general, industry-specific, and topical standards. So information is there. A lot of research is happening. Wherever you want to map your business activities to those topics, the choice is available. And this is what the standard is saying, that before heading on to taking your own choices and looking for the local knowledge or practices, which is allowed, go for sustainability standard 2 if you want to disclose your GHG emissions or climate-related risks and opportunities. Until we don't have the S2, S3, S4 series, you can go to the SASB standards, which has given a lot of information on a topical basis. If you feel that one standard or one industry standard is not sufficient, you can apply multiple. You can pick and choose topics out of that. Still you feel that no, I have already embarked on a journey of a GRI-based reporting. You can continue using those topics from that, but it may not allow you to give the statement of compliance that we are compliant with this, but generally that is acceptable. So the devil is in the detail. And that detail is bundles of information if you print those. So that will be one of the most critical exercises, and the good to see is that some of my clients' representatives are present here. They've already taken this journey. So we have use cases in our market where this can be done. And at a stage where we don't have a regulatory pressure, we will adopt to this standard practically in the recent future, but those who have already started will have some benefit out of it. Moving forward, as I said, the framework. We all are well aware of these words. What is governance to my business? In my country, we have got the codes which are detailed enough, which tells us how to establish a governance around a subject. We are an economy where a lot of matured businesses are there, where strategies are very, very visible, and we can document the strategies. Risk management frameworks, especially in the financial sector and in the non-financial sector as well, are well mature in our country. Matrices and targets, as I said, there's detailed guidance available. This is where we need to do more work, right? And this will build upon when other standards or other series standards in this S1, S2, 3, 4 will be coming. These will be increasing the burden on the reporting entity that they need to consider a lot of detail, the process a lot of detail. To do that, the reliance will be on your internal control system, your overall governance maturity, right? How the information flows between the stakeholders and the management. This will all determine that how quickly and how better you'll be able to present that. It's very easy to choose a metric, find a way to present a number, but it is very difficult to continuously report that. It's very difficult to map your performance against those matrices. So for that, you need a very mature data flow system, data capturing system in your organization. And when you have these complex models to be built, you need support from the support functions, may it be the internal audit, may it be your risk management, may it be your finance itself. So it is enhancing your capabilities to deal with this difficult standard. For the sake of transition, this is applicable from 1st January, years starting after 1st January 24. But what they are saying is that you cannot present the comparative information, that is an obvious, but they are also asking that, okay, for the first year, don't report everything, only report S1, so that it gives you a year and a half more to work on that. Even for S1, the most difficult part is scope 3, so you can skip that for the first year. So relaxations are there, and they're also allowing the jurisdictions to adopt in a collective basis. For example, as a country, if we want to take some relief, we can, but we need to see how it will impact our overall maturity, where we state that we are IFRS compliant entity or jurisdiction. So that will be a challenge. Otherwise, these two standards and even the upcoming series is very flexible. European standards are already there. SEC in the US is already ready. There will be group companies receiving instructions from their head offices to report based on those standards, which are already very, very, very mature, and there are use cases available. So one way or the other, if we adopt on the basis of any enforced circulars coming from the regulators, or our suppliers, our business needs force us to voluntarily adopt these. These both will happen. I'll skip this. Yeah. So there is one way of doing it, mandatory adoption, that we, as ICAP or any other regulatory body, SECP, we issue directives adopting the standards as we have done for the IFRS. The timing will be critical. Do we have the resources available in the market? Do we have the assurance providers ready for that? Do we have enough consultants to support these complex issues? All these will depend and will take a journey. So the sooner we start is the better. Similarly, you would have seen that in the textile sector, right, there has been a lot of reporting happening these days because it has become a compliance or business survival matter for them. Their customers are not allowing to enlist them as their suppliers until they publish sustainability-related reports. So the business will create the need in the future, even if on the regulatory front, we try to seek some relaxations based on the limitations which I just discussed, mostly intellectual and maturity-related problems that we will face. It's a journey, it will take time. Now, as we discussed, where the reporting will happen. A simple picture. This is kind of an integrated report where in one document we publish the sustainability as well as the financial statements. It's very easy to cross-refer. The requirement of this standard says that your assumptions, your judgments have to be consistent. There may be extended disclosures, but your judgments and assumptions underlying the financial statements have to be consistent with those presented in these sustainability reports. That's a big challenge. Right? Or another easier way is that what some of the practitioners in our country has followed is that you publish your sustainability report and you connect that information by cross-referencing. Do we need to get assurance? Yes, but not the subject today, because we are just implementing a reporting standard, and definitely when the reports will come out, the assurances or assurance providers would need to be included in this whole journey. And already we have the exposure draft for those kind of assurances which are specific to climate change and which are specific to sustainability reporting. And this will be a migration from ICE 3000 related assurances that we are providing. Now, there's another question that, okay, climate-related disclosures, S2 is there. As I said in the start, it gives you options to adopt various other standards. So in this slide, I've just tried to summarize. Yeah. So again, the 4 pillars: governance, risk management, strategy, matrices, and targets. You have S2 available for the climate-related things. But if you identify something on other environment topics, social areas, or the governance issues, from where you will get the guidance. So they have given us the sequence. First is a shell that all the disclosure topics preferably should come from the SASB standards. The criticism is that those who have already started with the GRI-based reporting, and that those is actually 70% of the reportings today happening in the world, is GRI-based. But GRI is not the member of IFRS group, so there will be a reconciliation going forward, because it will be very difficult to migrate from a very large data set of GRI standards if you have already started working on it and moving it to, but for the comfort of the audience, there's a lot which is overlapping. It is just the approach. SASB standards are actually based on, as I said, industry-specific classification, whereas the GRI is following the 3-tier approach, where they are more focused to the topics, and they are more focused to selection of the topics based on double materiality and stakeholder engagement. So the framework we are talking about in S1 and S2 is much simpler, has some haircuts than the GRI-based detailed overall sustainability-backed reporting that covers the double materiality, financial as well as impact materiality. Right? So it's a journey from simplicity to complexity, right? We need to know all this, and we need to map the requirement to our business. And everybody will be taking judgment calls that to what extent it relates. And the standard is extremely flexible, providing you the opportunity to take those judgments as it suits you. And even if you are unable to present it now, you can mark it there, present in that report that we have identified this. At this point in time, we don't have the databases available for us. We don't have the processes to process that information. We will do it in the coming years. Right? So all this is available, but the problem is it has taken years for the businesses to adopt these and to mature these reportings to meet the expectations of wider group of stakeholders. Here, the group of stakeholders, as I said, is only 3: the investors, the lenders, and some of other creditors. That stakeholder group will expand, the interaction will expand the topics that you report. So again, I'm repeating this, it's a journey from simplicity to complexity. Now we have time, maybe 1 year, 2 years after, when the multinationals operating in this country will already be forced to report. The people who are interacting globally, the exporters or the importers, they may be forced to adopt to certain standards, maybe ESRS in the Europe, or maybe SEC directives in the US, or maybe S1, S2, which is being applied in other international jurisdictions. So the choice is not there, imperative is there, it's already here, so we need to start taking actions. This is the divide which my colleagues have forced me to explain. Sustainability-related financial reporting is the subject of S1, S2. But the impact reporting is not part of this at this point in time. What is impact reporting? Right? Impact reporting is publicly disclosing to a wide range of stakeholder information on an organization's most significant impacts on the economy, environment, people, and how the organization manages these impacts through the GRI standards. So this debate will continue for some amount of time till these IFRS bodies recognize the double materiality concept, recognize the wider stakeholder arrangement, and come out of the mindset that only financial reporting is required. So it will enhance, but for now, we have a haircut-based standard which we are applying. Again, we have discussed this. Yeah. So how to start? What to do? What we can do now? For example, if today we start our journey, we need to understand the impact. What are the requirements which are mandatory once this gets adopted in this jurisdiction? The 4-pillar approach around each topic. Take reference to SASB standards. If you are already working on GRI standards, reconcile or map them to the SASB standards, and you will find most of them are already mapping. Then, understand when, how it will impact your company. Then, do a materiality assessment, which is, for now, is the financial materiality. But going forward, as you enhance your lens for the broader group of the stakeholders, as we discussed, it will automatically force you to adopt to the double materiality concept. Assess the maturity of your processes. As I said that, whenever you enhance the reporting or information processing, you need support coming from your data, the maturity of your processes, your control environment, control procedures, right? And